Hi there folks. So should Forex traders be trading Bitcoin or indeed any cryptocurrency for that matter? Today I want to touch on the differences between trading Bitcoin and Forex. Should Bitcoin be part of the Forex trader's path to success? It's hard to ignore the fact, unless you've been sleeping under a bridge for recent months, the massive rise that the Bitcoin value has had. Viewers of the channel here and members inside our community are constantly asking me, should Bitcoin now be part of their trading plan? So today I'm going to lay it on the table for you so you're left in no doubt. Okay, so today we're going to talk about the difference between trading the Forex market and Bitcoin or cryptocurrency. Start off, of course, by talking about what is a cryptocurrency. Well, cryptocurrency, Bitcoin, whatever, is basically a digital currency. It's been created, it's been mined by the guy in the street, maybe small companies or groups of people. I think more recently banks have got involved in that as well. But here lies the big difference between cryptocurrencies and the regular currencies. It's not legal tender. Now, unlike, say, the pound or the US dollar, these are known as fiat currencies. Fiat currencies basically issued by banks, central banks, governments and so forth, that basically say they're worth a certain amount and can be exchanged for goods and services and should be accepted in exchange for goods and services. Now, more recently, a lot of the cryptocurrencies have been accepted in exchange. They're not legal tender, but certain companies are now accepting them. I thought Tesla announced something a few weeks back as well. And of course, you've got PayPal as well. Who knows where we'll be in 10 years' time from now. But they're not legal tender, unlike the fiat currencies. So fiat currencies are issued by governments and central banks, and they can literally issue, as I say, as much as this paper as they like. It's not actually worth anything. It's only worth it because they say it's worth it. But they issue as much as they wish in order to regulate prices and to regulate the economy. By the way, this is not legal tender either. You can buy this on Amazon for about 20 quid. It's got the fake play money written at the top. Be careful about that when you see all the other gurus out there educating and telling you about how much money they've made. Now, cryptocurrencies, on the other hand, these are enacted on the blockchain technology, which basically regulates the finite supply. Now, I'm not going to go into too much detail here about the blockchain, about halving and so forth, but it basically ensures that there's a finite supply and therefore not debasing the value by more and more issuance. So that's the main difference between the cryptocurrencies, non-legal tender, and the fiat currencies, which are considered legal tender. So consider this, the Forex market is widely reported to be the largest financial market out there. I think you've all seen the numbers out there. A lot of the educators talk about it. And the biggest cryptocurrency out there is, of course, Bitcoin. It's absolutely dwarfed by all the currencies around the world, by the fiat currencies. So the crypto market is minute in its issuance compared to the fiat currencies. One thing that sticks out like a sore thumb, and that is volatility. Cryptocurrencies, Bitcoin, is by far the most volatile market out there, far dwarfing what's happened in the Forex market. Consider this, in the beginning of 2021, I think Bitcoin was trading around, was it $20,000? And it went up to where we are pretty much close today of $60,000. That's like a 200% increase since the beginning of the year. That's 3 short months away. Look at the most actively traded currency pair on the planet. That's the euro against the US dollar. It's actually had a rise of about 5% in the last 3 months, and has now fallen back 5%. It's basically pretty much flat since the beginning of the year. So you can see there's a massive difference in volatility of the crypto market to the currency markets, and that affects us as traders, and it's something we need to be aware of because it affects the cost of trading in a number of different ways. Now, there are 2 main ways where you can buy crypto or Bitcoin. Now, of course, you can buy the real thing. You just need to go to one of the major Bitcoin exchanges out there, and if you are fortunate enough to have 60 grand in your pocket, you can go out and buy a whole coin. But you can also buy fractions of coins now as well, so it still is accessible to the average guy in the street. And there are, of course, associated costs with any investment. But if you want to invest in speculative investment, buy it, maybe stick it under your pillow for 5 years, then maybe it is a worthwhile venture. You've always heard that story about Microsoft when that launched back in, I think, 1986. So I think it goes that if you'd have put in $5,000 on the IPO of Microsoft, you'd now be worth over $10 million. So putting it away, squirreling it away for many, many years may be something you might want to consider. If, on the other hand, you want to trade, basically buy and sell within the trading day, then you need to go to a licensed crypto broker, and you can trade the CFD. So you can basically buy it outright, or you can trade it via the CFD. Sounds like a contract for difference. But because it's so much more volatile than the Forex markets, as I alluded to, the costs are going to be far greater. For one thing, the spread, and the spread is basically the difference between the buying price and the selling price, that is going to be far greater. So you need to consider that. You need to be more right trading the crypto on the CFDs than you do necessarily the Forex, because the spread's bigger. Think about the margin as well. A lot of the regulated Forex brokers now that allow you to trade the CFDs on crypto, they require a large amount of margin, which basically means to take a small position, you need to take out a lot of your capital that you have lodged with the broker. The other thing you should be considering as well is leverage. A lot of people are drawn to the Forex market because of leverage. Now, back in the day, a lot of the educators and the gurus out there are saying you get 500 to 1 leverage and so forth. More recently, the regulators have drawn that in. ASIC have just reduced theirs as well, I think to something like 30 to 1, pretty much the same here in Europe as well. But with trading the crypto market with CFDs, leverage offered by many brokers is minuscule, if at all, in many, many cases. I saw one the other day offering 5 to 1, but quite often it's a much less, maybe 2 to 1 is becoming the norm. So those of you that are attracted to the Forex market because of leverage, so basically giving you an opportunity to make large amounts of money with a very small capital outlay, maybe finding it a little bit more problematic when it comes to the crypto market, because of course the leverage offered by the brokers is going to be a lot less. So think about what the main drivers are of these two different asset classes. First of all, you've got the fiat currencies. Now, fiat currencies, like any trading entity, basically is driven by fundamentals and technicals. Now, the fundamentals looks at the macro view. Fiat currencies is obvious. Fundamentals of a currency looks at the state of a particular economy. Is it growing or not, and so forth. But not one major event normally affects a fiat currency's movement. It's normally a culmination of events over a period of time. Whereas on the other hand, you've got the crypto markets. We all know there's lots of cryptos being mined at the moment. New names are coming up all the time. Clearly in time, there won't be room for all these different cryptocurrencies that are being mined. So the fundamentals can literally change on a dime with some of these cryptos and basically seeing them wiped out. So the risk of losing a lot by looking at the fundamentals on some of these cryptos, I think, does increase to a certain extent. So the crypto fundamentals are also, I think, a lot harder to read in terms of its chances of success going forward. All it needs is one big announcement from a big central bank and pop, the lot could go in one fell swoop. So be very, very careful when you're trading the fundamentals, looking at the cryptos. The fundamentals, trading the fiat currencies, are sometimes a lot easier to read. Okay, so let's now just quickly summarize exactly what I have been talking about, the comparisons between crypto, Bitcoin, and the Forex market. Okay, so first up, let's look at the market hours. Now, the Forex market is open 24 hours a day, 5 days a week. Closes at 5 p.m. New York on a Friday, opens again 5 p.m. New York on a Sunday. So it's basically 5 days a week. Whereas the cryptocurrency is open 24/7, 7 days a week. For those of you that want to be trading on the weekends, for those of you that maybe have week jobs, doesn't allow you to trade, maybe the crypto market might be for you. It is open 24/7, Saturday and Sunday as well. Some brokers do close for server resets and so forth. Check that with the broker indeed. But those are the market hours. Cost of trading, we talked about this, the spread. Now the spread on the Forex market tend to be quite tight. The spread basically is a component of the cost of trading. And the tighter the spread, the lower the cost of trading. The crypto currencies, trading Bitcoin on a CFD, the spreads are much wider. That basically means the cost of trading is much higher, so you need to consider that. Accessibility. Well, this day and age, Forex is basically accessible by multiple brokers all over the world, some regulated, some not regulated. And of course, you have to do your due diligence on that. But the cryptocurrencies, yeah, it's still there on the CFDs. Not every broker offers it these days, so do go and check. Some brokers will permit the CFDs. As I say, some will not. But it's fair to say that most brokers offer Forex. not most brokers offer crypto CFD trading. Check it out. Volatility, Forex. I put down low, and I thought when I put down low, I thought it's not really low. Sometimes it can be very volatile, but it's lower compared to the crypto market. Okay, so volatility in the Forex tends to be lower than the higher crypto markets as well. So volatility. And leverage, because of this volatility factor, because it's high volatility, often you'll find that the brokers offer a lot less leverage. I touched it there on the main video. Here we've got the Forex. You get 30 to 1, 50 to 1. Some non-regulated brokers will be offering you 100 to 1, 500 to 1 as well. All these leverages are coming down around the world. Be aware of that, and they're coming down for a very good reason. But in the cryptos, because it's so volatile, some brokers offer zero leverage. I have seen brokers offering up to 5 to 1 leverage. I think 2 to 1 leverage is maybe quite common, but check out the leverage as well. People are drawn to the Forex market. Why? Because it offers them leverage. They can trade more than the money that they have in their account. Not necessarily the case with the crypto because of the high volatility. And margin, of course, margin is basically the amount of money you need in your account to open a position. It's a lot lower trading the Forex market than it is the crypto market. So again, things you may need to consider. Okay, so I hope you found this useful. Hopefully you now know the difference between trading Forex and the cryptocurrencies. Subscribe to the channel if you don't already do so. Don't forget to hit that bell notification. You'll be notified the moment I release my next video. You can follow us, of course, on all the socials. And of course, if you do want to take part in our regular daily live streams, join our interactive community, you can register below for a 7-day free trial. I'll see you next week.